Hello and welcome back to the Geordie Pig Investor channel. Today we're going to have a look through our InvestEngine portfolio update for December, the final month of the year, see how the portfolio's performed this year, see how it's performed over the last month, and we are actually going to cross that £1,000 mark in our ISA back to ETF and chill pie, which means overall we'll be closing in on the £2,000 in total overall balance in our InvestEngine account. If you haven't seen this series already, what it is an ISA account that I have opened up in InvestEngine, where I invest solely in ETFs because that is all you can invest on InvestEngine. They are strictly ETF only, which I think for new investors is really good because it stops you stock picking. It stops you trying to pick individual stocks out that may perform well or may perform bad, and it forces you down the route of having to invest in ETFs, which for most investors I would 100% recommend, as it takes away the thinking process. It's a lot easier to invest in ETFs, put the money in every single month and not have to think about it, and over time that money will likely grow as long as the ETFs you're investing into are quality ETFs that have good past performance. And obviously past performance is not a guarantee of future result, but if you look historically at the stock market since it ever was first opened, you will see that over any 20-year period you are going to make money. So as long as you're in this for the long term, you will be likely successful investing in ETFs. So if I take you into my ETF and chill pie here, we can actually show you what is worth now and the returns I've already made. So we can see I'm up 23% in this one, plus £114 since it opened it, and that was back in November 2023 now, and I have just over £800 in here. So if I show you the different ETFs that I am invested into, we have the main bulk of the portfolio being in the Wisdom Tree Global Quality Dividend Growth ETF, GGRG. We then have UBS Factor MSCI US Quality ETF, UC99, Xtrackers MSCI World Momentum, XDEM. We have the iShares S&P Small Cap 600, the ISP6. We have the Xtrackers MSCI World Quality, which is XDEQ. Then we have the Xtrackers MSCI World Value, which is XDEV. We have the iShares MSCI Emerging Markets at EMIM. And finally, the Franklin FTSE India FRIN. Now, my allocation across this portfolio, you can see that I only have 4% in a couple of these stocks here, and then we have 8% here with a couple of 10s and 12s, and half of the portfolio is in the two at the top here. So you may be thinking, well, why don't you just put all your money in there? Now, for me personally, I just like to experiment and like to have a few different ETFs in this portfolio, and I find it quite interesting to see the comparisons between them. And interestingly, you can see that the World Momentum ETF has performed the best, being up over 40%, and then you've got the World Quality up over 26%, the S&P Small Cap at 23%, and the two bigger positions actually haven't been the best performers since opening this up. So it could be something that next year potentially I may review the portfolio and have a look at the different stocks, and I may change the allocations around. But right now I'm still very happy with how it is. Now the UBS is actually only 5% of this portfolio because this ETF only came onto the market at the start of 2024, which means I was not able to get the full allocation of the 20% into this ETF before I opened up the ISA version of this portfolio. So like I say, this was made because back in 2023, you were not able to have two ISA accounts, and my main ISA account is over on Trading 212. So I had to open up this account once it was eligible in April of 2024. So you can see the last payment went in March 2024, and then I was able to swap across into the ISA, which I'll take you into right now, and that is where we have been continuing to invest ever since. So you can see since I opened up the ISA in April, I have actually put in £100 at the start of every single month since then, and it is actually into the exact same ETFs. Obviously, it's going to be slightly different on the gains made in this one because of the fact that it's since April. So before April, some of these stocks may be performing a lot better and then have dropped off, or it could be the other way around where they weren't performing that well since then and they've performed a lot better, such as that UBS Factor MSCI World one. If we have a look here, that is actually up 13.6%, which is actually the best performer in the entire portfolio in this one. So you can sort of see the contrast and the difference when you invest in different times. but I just like to invest £100 in this portfolio at the start of every single month. And my reason for doing that is to show you guys that you don't have to have a lot of knowledge to be able to invest. You can simply have a little bit of capital available. If you do it every single month, just stay consistent with it, you can start growing that capital, growing that money, and investing in your future. So that is why I do it like this. And you can see the allocations in here are exactly the same as in the general investing pie was. So we do have a 4% allocation in these two. Then it goes into an 8% for the MSCI World Value. We've got 10% in the World Quality, 12% the small cap and the momentum, and then the main bulk 50% across these two ETFs at the top. So you can see the Wisdom Tree Global Quality Dividend Growth ETF hasn't been performing as well as I probably liked if we compare it to the others. So potentially this could drop down to maybe a 25 or a 20% allocation, and this one might get bumped up. But that's something that I'm not going to review until April, in the start of the new tax year. That's when I like to review my portfolios, make sure I'm happy with all my positions, and if I want to swap out any positions, that's when I'm going to adjust the percentages for the different ETFs. Or if an ETF was very heavily underperforming and I wasn't very happy, such as the MSCI World Value only being up 1% since investing in this last year, and then I could potentially sell out of that whole position and just move that capital into a different one. So there's always that opportunity as well. But like I say, I like to review my portfolio once a year in the April, unless there's any significant things that have happened where I may need to look at it a little bit closer. I might have to sell out positions a little bit sooner than that year mark comes up. But with this portfolio being ETFs only, that's where that advantage comes in. Investing across a wide spread of stocks within those ETFs, so I never to be too worried about ETFs and having to really pick my ETFs out. I'm happy as long as I've done my research on the ETFs when I initially purchase into them. The likelihood is they're going to be pretty similar year on year, as they're going to follow that specific criteria every single time and make sure that they're picking the stocks that you've sort of wanted through criteria that they have in their ETF and the criteria that you're following to actually be investing in them. So that's why obviously in my stock picking in my Trading 212 account, it's a little bit more specific, and I have to analyze the stocks on more of a month-to-month basis and make sure I'm happy with them, because if the fundamentals change within a stock and potentially bad earnings reports come out, and there's also their FCF payout ratios going through the roof, and the numbers aren't just adding up and their debt is increasing and increasing, then there's potential that I may need to sell out of those types of stocks, such as Burberry last year when it totally cut its dividend. That was a good example for me where I'm investing in dividend focused stocks. So when it totally cut its dividend, I felt like it was not a stock I want to be invested into anymore, and I sold out of that position and then reallocated that capital elsewhere. But like I say, a lot simpler in this portfolio, a lot simpler to track. We have had a 9% return so far this year, and I'm very, very happy with that. Over the last month, actually, it is slightly down, which is happy days for me, because that means I can invest into this portfolio now, as I'm going to do and show you, put my £100 in for the month, and that means that is actually at a slight discount compared to what I put in last month. So that is always a good thing in my eyes. So to invest your money into your portfolio, and here's very simple. Just select where you want to pull the money from, type that amount out, review the order, and it will simply put that order through for you. And once you press confirm order, as soon as the markets reopen the following day, then it'll put that money in at 2:30 p.m. So that is as simple as it is. There we can see now the portfolio balance is over £1,000 in here, and like I say, overall we're closing in on that £2,000 total portfolio value. So this is my InvestEngine £100 a month portfolio. Do you have an InvestEngine account? What different ETFs do you own in it? If you do, let me know in the comment section down below. I hope you enjoyed today's video. I hope this gives you a little bit of motivation to just stay consistent in the market, and you will be rewarded long term. If you did like today's video, please like and subscribe. This is the Geordie Pig Investor, over and out.